All good, thanks. All right, so let's get underway. As usual, there will be a few questions. Uh, Feel free as we're going through the presentation. If you have a question, by all means, definitely ask the question during the presentation. That's really good for me to kind of help with the flow of information. And if you're not sure about something, because remember that these sessions are designed for me to take you through the model, look at markets, look at systems that are running well, reinforce the way in which we're uh, applying our automation and applying our system management, but also too it's to highlight opportunities that are out there, but it's also reinforcing some things that you're doing or that you're not sure of. So if you have any questions about the process or the model or things that you're doing or done in the past or want to do in the future, feel free to fire those questions away, because this is a great forum for that. So I would definitely encourage you to, if you're going through the session and you have an idea or you want to raise an issue or a question, definitely feel free to do it as we're going through, and I'll address it as we're going through. So, uh, just wanted to kind of give you a bit of an outline of tonight. What I did this morning was I actually looked at, all right, well, we've got a number of systems that are running, and we've got the trend, the failed trend, the pivot, the cycle, the momentum, the viper. Now, these systems are designed to take advantage of different market conditions, obviously, but what I did this morning was we focused in on a specific market. We said, right, well, if we look at our top 10 systems, there are a number of strategies that are running really, really well. The currencies are offering some really good opportunity at the moment, and fortunately for us, we've got the ability now to apply a trade copier to TradeStation to send trades to an independent broker, one of our we've got a forex broker that's not TradeStation, which is great because we've found that typically the TradeStation spreads are great. So generally what we're seeing is the spreads within the platform and the spreads within IBFX are pretty ordinary. So we've been able to source a third-party broker to give us better spreads. It means obviously trades being copied to a third-party broker, but it seems to be working pretty well at the moment. We've got a few traders trolling that out, and so far so good. So we'll give you some more information on that as we go forward. But the advantage there is that obviously we get better spreads, better rates, and it means that we can copy trades off the continuous contract or the current contract, or obviously for the currencies we don't have a continuous contract, but for markets like gold and things like that, well, then we can copy the trades off the continuous contract, and the continuous contract always outperforms your current contract typically in what we see. So, and what we've found as well is that at the moment, if you did have a split forex futures strategy, or sorry, a forex futures portfolio, you would be doing really well with the forex. Let's have a quick look, just by way of just tapping into the top 10. We'll have a quick look at our top 10, but we'll have a look at some of the forex systems on the Viper strategy. Now, before everybody asks me when's the Viper out, it's Mike's working on it tonight. He should hopefully finish it tonight. Now, the reason why there's a delay is that we wanted to make sure that every single system we produce has this 1-0 function. So what I mean by that, and I've mentioned it before in the room, is that when we load our strategies up, we want the ability, when we set up this full automation and full automated optimizer, we want the ability to go through and basically just optimize on every element or component. So that means that 1 and 0 are the options there. If you set true and false, you can't set it up like that. So anytime you're using a plugin or an API or something to optimize variable numbers in a strategy, you need 1 and 0 as your inputs. So Mike is just going through at the moment and just making sure that every strategy we send out now has that 1-0 replacing true and false. So that's why it's kind of taking a little bit of time. We found an extra bug on the MACD as well, but so we're going to see that your results are going to be better, obviously. Now, I'll just go back to the Viper results here. So one of the things we found was that, look, the Viper itself, here it is here, is doing really, really well on the currencies. Who here is tracking the currencies or has had a look at some of the currencies using the Viper strategy? Because it's really doing well. I mean, you've got the Euro Yen, the Euro USD, you've got the Aussie dollar. There's two Aussie dollar strategies. There's the 233 and the 30 minute. My preference personally is the 233 because I kind of lean towards tick data rather than time data, purely based on entry, but both are running well. We've got the Pound Aussie, which is one of Raj's ones on the Renko. Raj has put together a couple of nice ones on the Renko. So between Raj and Derek, they've been going at it pretty solidly on the Viper and done some really good numbers. Let's just continue here for a second. Apologies there, guys. Sorry about that. So, as I mentioned before, we need to make sure that whatever we're tracking, whether it's Viper, Trend, we always want to make sure that we've got, I guess the first point is that we've got the most up-to-date information and strategy. So anytime you're tracking these systems, you want to make sure that when you're looking at them, you've got the latest ELD that you should be running. Typically what we do is if we send out an ELD, that will supersede any previous ELD. So when we send out this new Viper, once you run that, unless we make it, say for example, Viper version 2, it'll basically just override any of your previous Viper strategies. So that's what you'll find when you load the new Viper up, and it'll have the bugs that were previously in it, and the main bug obviously was the long stop that we mentioned previously. But if you have a look at the Dropbox and the Viper Systems Performance Grid, there's some really good numbers here, as I mentioned before. The Euro Yen, coffee's doing really well, crude. But what I want to do is just jump in, and I'm going to just take you through this copper strategy here. Now, we focused in on this morning because what we found was that at the moment, and this is something that we all need to do as a collective group, we need to make sure that we're tracking our systems. Now, when you're looking at your model and looking at your system optimization and making sure your systems are running to their optimal capacity, one of the things we want to do is if we do get a dramatic change in market conditions, what's typically going to happen to our strategy? If I'm now, CT181 has been tracking along beautifully. Now, CT181 is a cycle trader strategy. So if I map out the daily results on the cycle trader, you'll see that it's been pretty much low to medium volatility all the way through till about, say, September, October, and then we get that spike up towards late September, October. Now, remember that this is delayed information. So what it's showing you, though, is that we've got an increase in volatility and an increase in range. So what would you typically expect to see on our cycle trader, which is has been one of our top 10 strategies? So if we grab the top 10, and we'll grab that now, our top 10 grid. Let me just bring that up now. You'll see CT181 is in our top 10 purely because of its performance. It's been very consistent. So, but you'll see here, so last week, 1611 had a losing week. Now, if the cycle trader, if CT181 has a losing week of $612, that would basically be its circuit breaker. So that strategy should actually be off because its max drawdown post last week or previous to last week was 375. So it was running really well. It's good profit, 8738 was its overall profit. It's been tracking really well. But prior to last week, or prior to the last 2 weeks, we had a max drawdown of 375. So we had to be fairly vigilant with this cycle trader because we knew that we were moving, and this is something you should know if you're trading a system. Now, if you're only looking after 3 or 4 systems, you really should know what's going on a daily basis with your system, shouldn't you? If I'm responsible for 4, 3, even 5, maybe 10 systems, I'm going to make sure that I definitely know what's happening on a daily basis to my market. That's my job. Like, my job is to manage this portfolio. Like, it's not Clyde's job or Chris's job or Anthony's job. That's my job. If it's my portfolio, my account, my trading systems, it's my job. It's no one else's responsibility but mine. So if I suddenly see that CT181 is starting to lose some money, I should know why that's happening. I shouldn't be thinking, oh, what's going on with CT1? It hasn't had it's having a few losing days or weeks. Well, you should really have anticipated that, because clearly to me, when I'm looking at this daily chart, I know that it's been tracking really well. So I should be looking at this chart thinking, right, well, I've had a damn good run on CT181. Even with the spike in volatility, I'm still making good money. So if I go to CT181 and I have a look at my performance on the equity graph, even though I know I can see what's happening. I can see what's unfolding in the market. I know that I'm going to get to a point, if I don't do anything about the strategy, if I don't optimize stops and targets, or I don't I don't run a fairly tight circuit breaker, I'm going to take a fairly hefty drawdown here, because this is a cycle trading strategy. We've got an increase in volatility. We've got an increase in range. What's going to happen with my strategy? It's not going to work. The conditions have changed. They were working beautifully previous to this. They're not now. So it's fairly obvious to me that what system do I need to be looking at for the cycle trader? I mean, for copper. If I'm looking at copper here, I see an increase in volatility and range. What system do I need to start looking at to substitute or to run side by side? Because what I can do one of two things. I can say, all right, I'm going to run copper, CT181, that's my system. I'm going to run it until it hits a circuit breaker, because really, I've got a $300, $400 circuit breaker. It's not a big deal, is it? Really, not really, is it? So if I do hit that circuit breaker, which I have, because if you look at my stats, it's had a losing week last week of about $600. So if we go to weekly, 612 it was. So it's hit its circuit breaker, we're out. Okay. But what should I have done pre that happening? Because, you could see that coming a mile away. What was my strategic move as a trader as soon as price started to, or as soon as that volatility jumped over there? Now that happened when we got the volatility increase. That was the 20th of September. Plenty of time. This system hasn't gone off really until November. So I've had a month and a bit to get ready, to do something, to look at something else, which I have done. I've personally done that because that's what I've been working on. But the point is, if you're trading CT181, you should have had a move up your sleeve before then. You should have basically been preparing for that. So my move was to say, right, well, volatility's up, range is up. I need to go to one of my momentum systems. Viper, Trend, exactly, Chris. Another system, Trend, Viper, Momentum. We've got a multitude of systems that we can run side by side. So let's have a look at what happens when we look at. Let's see what happened with the trend. So the trend is on. You can see it there. This is just something that I've been tracking. It's just a basic strategy. I'm sure that if everybody jumps in and has a look at it, and I've just put it into Dropbox, it's been tracking okay. Like it's It started off with a slightly better average trade net profit on the long side and overall. It's it hasn't run as well as as it hasn't been as high as average trade net profit as I would like. I'd like it up to around about 100. But I'm sure that if somebody grabbed this, they could definitely do some better numbers with this strategy. So, but the point is that it was a laydown misère. We have a higher volatility market. We should be running the trend or something like that. And I'm sure if you once we get the Viper out tonight or tomorrow, you'll be able to apply that to copper, and you'll do better, even better with the Viper, because it's look at the movement you've got in this market. Now, this is clearly a market that is responding beautifully to the trend of Viper. It's just, like as soon as we get around about 3 o'clock onwards, we're getting some really good movements. You don't want to trade it too early because of for what reason? Why wouldn't you want to go in too early on copper? Because let's have a look at the volume specifically. Yeah, so good points from Raj and Bill and Chris. Also, Clyde's chimed in there with saying that if you are tracking these systems, there has to be better systems running on your bench or in your back pocket, or as your backup, that are outperforming CT181, and that's right. And we don't want to start copper too early, because if we start copper too early, we're going to get slippage. So you really need to pinpoint or look at your spread. You always want to have a look at your spread on your systems. Now, you're less likely to get that spread issue if you start a little bit later in the session. You need the volume in the market. But you can see that this market is running beautifully. And I would probably run the Viper on this rather than the trend. I've done it on the trend. I would probably spend a little bit of time on the Viper, and I'm sure you can get much better numbers on the Viper, because it has a tendency to really run well. So I think that with a little bit of work with a Viper strategy, you're going to pick up those beautiful swings. Now, the other thing too is that, all right, well, the trend, you can get some really nice trending moves, but you can get these happen quite frequently as well, which are quite annoying. They're like little spikes of movement, and it's like a false breakout, and this false trend, failed trend, happens a lot on this market, happens a lot on the bonds. Now, we've actually coded up this failed trend, and that's what I mentioned this morning. I mentioned, right, well, if we do get a situation where CT181 falls over, which it has, it's basically fallen over, we want to go in with a little bit of a tactical response by applying the trend or the Viper, but we also want to be able to cover ourselves a little bit, hedge ourselves a little bit, where we get that false breakout. Now, you'll see in some markets, you'll see it happen a bit where you get ultimately, and this 85 tick seems to be nice, you get a really good move at least, possibly once, twice a day on this market. A really, really solid, strong move. But you've got to temper that with the fact that you can get these false breakouts. So, based on what we have in our bag of tricks, or our toolbox, we have the failed trend now. Now, the failed trend is just that system or that strategy where we basically, if we do get a failed trend, a failure of the trend, we can take the opposing setup. So it just gives us the ability to almost hedge ourselves. So what I've done is I've done some work on putting this failed trend together, and I've actually come up with some reasonable numbers here. It still needs a little bit of work. The average trade net profit there is at 88. Now remember, on the trend, we're sitting at 51. So ideally, we want both of these systems a little bit better. And if we spend a little bit of time, we can get them much better than what we have. But at the moment, the failed trend is looking quite good. It's probably the better of the two. And when we add them together and start looking at them as a collective, we start to see some really nice performance. Now, if we go into our monthly stats, if we were running this, now remember what we're trying to do is we're trying to cushion the drawdown, because we've already received a bit of a drawdown on our cycle trader. Now its overall profit is 487. The drawdown has come obviously in November. That's when this system has hit its max drawdown, and it's exceeded what we would allow for that to continue. So at the moment, this strategy's off. It's been good to us. It's been consistent with $2,000 over the last couple of months, but this month has definitely seen its demise based on volatility. But then if we look at our trend and our failed trend, if we look at our trend first, you can see that stepping into play, clearly the trend has been good from September, October, November. So any drawdown we've had in November has been cushioned by the fact that we've got a trending system in play. Now, as I mentioned before, this is what you should be looking at with your strategies. If you do, and I mentioned this morning, what system is going to trade more frequently, the trend or the cycle, based on volatility? If you imagine volatility and the trend as cousins, and them being very, very much related, how often do you think we're going to have periods of high volatility? How often are we going to move into this period where we've got very high volatility? Is it going to happen often, or is it going to not happen that often? Yeah, so we really need to be ready for it. We need to be, we know that the cycle, that this high volatility is going to happen 15 to 20% of the time. It's happening at the moment on the Forex market, which is awesome because we're getting some really good moves. We need to take advantage of that. It's happening on copper at the moment. We need to take advantage of that. So you got to be, when it's time to go in and take advantage of the volatility, you want to definitely be in those markets where there is good volatility. And this is one of the things that we're going to be kind of spending more time on as a group. We're going to be spending a lot more time on identifying which markets are running hot, which markets have got the high volatility, because we want to be jumping into the markets where the opportunities are. And obviously it's easier to identify low volatility markets because that's pretty much what we get most of the time. So when we do get the opportunity of high volatility, we want to be setting ourselves up for that to happen. And you can see it was being forecast here in this standard deviation stochastic. You could see that we were heading for high volatility. So we should have been planning for that as a group. And this is what we're going to be doing going forward, planning for volatility as a group. Now, one thing I'll say to that is that when you are tracking a strategy like that, copper or a market like that, you want to have these systems that are ready to go when the volatility hits. Like I said, with copper. Now, the beauty about it is that you want to be able to go in with a trending strategy, but you also want to have your fail-safe, failed trend strategy, which is this one here. Now, this is on copper, and you can see that this failed trend is doing, this copper strategy is doing massive numbers in November. So it didn't do really very well in September. Not surprised because we got low volatility. Did much better in October, in line with August, September. In October did better, and in November this thing is just been fantastic. So definitely producing some really good numbers there. Now, another market that is doing really well with this failed trend is gold. So gold has seen a lot of volatility. We've broken through 1200, starting to see a little bit of a pushback above 1200 now. So gold is a market that has seen some really strong selling. And what I've done with this failed trend is I've looked at the failed trend on a slightly higher share bar, so a slightly higher tick chart or share bar, and I've looked at it on a 505, and it's doing some really, really good numbers on this higher share bar. So I've got this running on a 505 share bar. Let's have a look at some of the stats here. The max drawdown on this strategy is 1840. Our average trade net profit is 104. Percentage win rate is 46. Now this is the failed trend, remember. So this is again. So what would I be wanting to do with gold if we go to the gold, we'll go to our gold daily chart. So I'll just add in a gold chart here. Because remember, it's like playing a game of chess. You've got to be thinking about what's my next move on these markets, because I know that I've always got to be planning for that next move or that next opportunity. So when we add in here gold, we know that we're in a period of high volatility. So what should I be doing if I'm applying a failed trend strategy on gold? What else should I be wrapping my portfolio in with to make sure that I'm getting the most out of this market? What other system should I be adding to this? I should be putting in the trend or the Viper, shouldn't I? Definitely. So if I've got the failed trend working, which I have, I want to add in the trend and Viper. And I would even probably look at not necessarily the same share or tick chart, but I'd be going something a little bit lower. And what I'd also do is I would be just making sure that what else would I do in readiness for a drop in volatility? What else would I be doing to be ready for because what's my next move? My next move is a cycle. So I need to get ready to have the cycle, because all of the opportunities here have been on the cycle. It's only now that we're getting this really beautiful run on the trend and the failed trend. So I really want to have that balance. I want to go trend, cycle, failed trend. And I'm going to let the systems take me out. I'm going to run a reasonably tight circuit breaker. So I basically, when it's time to take the opportunity, I'll take it. But I'll be fairly tight with my circuit breaker. The system will knock itself out, and then I'll just run the other strategies, because I know that I'm gonna test up my cycle trader for most of the year, because most of the year the cycle has been making money. But I also know that to a degree, this trend and fail trend will make money, and more money obviously now, because we've got that higher volatility. What do I need to be careful of during this period of higher volatility for copper, crude, gold, all of those markets, the currencies? What do I need to be careful of? Slippage. So so slippage and gapping. We need to make sure that if we are trading commodities particularly, or markets that close, we need to just make sure that we've tested our strategy so that we're not getting gaps above and below the market. Because you don't want to be in a position where you're in a really good winning trade, end of day close comes, you gap strongly the other way, and then you're basically your position's underwater, or you limit up, limit down. So you want to avoid that. So where possible, do your due diligence for holding positions intraday and going overnight. Is it worth the additional risk? If it is, great. If it's not, well then just simply apply that closeout phase where you close out end of day. That takes a little bit of the stress out. It also allows you to maintain that intraday margin. That's one of the things. That's one of the advantages of being an intraday trader. You're not subjecting yourself to the margin, the additional margin. Now the other thing is too that. So that was what I wanted to kind of cover off on as far as volatility. But so my focus for you at the moment is making sure that every single strategy you're trading, you are absolutely monitoring your volatility. Now, at the moment, what our model suggests is that you optimize once a month on stops, targets, trailing stops, and you should also add in here, and we haven't really covered this previously because I didn't think it had a huge value, but I would be optimizing on time of the day once a month as well. So the 4 things that you need to focus in on at this stage are stops, targets, trailing stops, and time of the day. They would be your standard optimization once a month on your high performance system or your pilot system. Then obviously every week you're looking at your longs and shorts and days of the week to make sure that those days of the week, longs and shorts, are still sitting above your average trade net profit. You're still making enough money on those days, and there's enough profit in those days to continue trading, and that specific day of the week or long and short hasn't hit its max drawdown. So the other thing though is that the only other time you should really be optimizing your strategy is when the conditions change. So what you'll find is that if we get an increase in volatility, you might decide to optimize your strategy, but your other option is to say, right, well, there's only so far you can optimize a cycle trader strategy. And really, if I change the dynamics of this system, this cycle trade, if I'm trading an 85 tick chart on my cycle trader here, and it's going great guns, and then we have this dip off. If I then decide I'm going to optimize stops, targets, trailing stops, and I can't really do much better than what I've got, it's basically time to basically stop trading that strategy because it's hit its circuit breaker anyway. So yeah, you're going to try to get the best settings you can, but at some point you're just tracking the system purely to determine whether it's making money again or not. Not to necessarily turn it straight back on because the conditions aren't perfect for it or aren't right for it. The other thing is, if I change that 85 tick to say a 937, I've got a different system, haven't I? It's not the same strategy anymore because I've basically completely changed the dynamics of the system. It's a completely different chart. It's a new system, isn't it? It's not the same system but a different chart type. So when you are tracking a system, this 85 tick copper CT181, that is the system there on that chart setting. If you decide to go to a higher or lower tick chart, that's a new strategy, and that's what you're applying, and that's how you're tracking these systems. Does that make sense to everybody? Because if we start calling, CT181 and we've modified it to a 937 chart, it's a completely different strategy because it's going to have different dynamics. It's almost a completely, well, it is a different time frame or tick chart, and it's much bigger. It's got a completely different feel to it. So we need to make sure that we're getting ready for obviously a change in market conditions. We're going to focus on that fairly strongly moving forward. As I mentioned before, the opportunities exist now in the currency markets. A lot of you are kind of doing some work or a lot of work on the currencies and testing, and that is definitely where there is great opportunity. But also you've got crude, gold. What's the issue for us with the S&P and the Eurobond at the moment? If we're looking at our top 10, and we know that some of our top 10 strategies would be Eurobond and S&P based systems, what's the issue for us on the S&P and the Eurobond at the moment for those particular markets? They're really kind of coming to potentially a peak. The volume's getting lower. We could get this Santa Claus rally that they talk about at the end of the year. That could push into January, late January. I'm expecting it there to be a bit of a rally, but potentially a sell-off in January. The trouble is, though, that we've had a massive rally on this. The systems have been running beautifully, and they haven't really required any change but you'll see that we're starting to slow down, and you'll see in the trades, SM312, SM316, they've started to come off. The last 2 weeks have been negative, 547. These are systems that really have had a fantastic run, and there are better options for us to look at. So I would definitely be looking at exploring different systems based on where those markets are at. And that's really why it's important to be looking at your daily charts, because you're not necessarily you're not necessarily forecasting. You're not a forecaster. You're not trying to do any technical analysis based on forecasting or based on projecting where the market's going to turn next, or doing any GAN analysis and forecasting a top or a bottom. You're looking at statistically where is the market potentially going to go next. How is the market? How is the daily chart affecting your intraday system based on volatility, based on range, and based on where price action is? So it's really just a logical step. Like, you're being very objective. When you look at markets like the S&P, the Eurobond, they're really making new highs, and their price action is reflecting that there's not a lot of momentum there. And you'll see that with the volatility and the range as well. So it just stands to reason that if your systems are starting to underperform as far as their overall performance, what's our next step? What do we do next? We obviously have to keep tracking the strategies, but if I look at my system performance grid here, and I'm looking at systems like I haven't got the Eurobond, but I've got the S&P loaded in here. If I look at that strategy, that's clearly not the best performing system over the last couple of weeks, is it? Even if we look at the last 4 weeks, clearly not the best system. It's made $120. Is that an underperformance of your capital? Definitely. So we've got markets that are clearly outperforming that, and we need to step into things like potentially copper, potentially some of the currencies, and move away and move into markets that are giving us, more volatility. So what we're wanting to do is we're wanting to base any decisions we have purely on our statistical analysis. That's all we're doing. We're being very objective. All we're really doing, regardless of where the market's at, it all comes down to the dollar return, doesn't it? So when you're looking at your top 10 systems, or if you select, say you're tracking 3 or 4 strategies and you put together another 3 or 4 that are your backups, why would you continue to trade a strategy that over the last month has produced $120 and maybe had, say for example, 20 trades, and the average trade net profit there is about $1 or less? Why would you continue to trade a strategy that is not making enough money, or $5, whereas you could potentially be trading, say, one of the other systems that meets your average trade net profit quota of $50 or greater? So these are some of the things you need to build into your reason for changing strategies, and it needs to be very objective. You need to base it on having an objective process for switching systems. It may not be that you have to hit your circuit breaker, but you certainly want to be objective if you're going to switch a system in and out. I would, with copper, we've got copper running pretty early on the cycle trader, but that's the cycle trader. So I'm not really too worried about copper from the point of view from the cycle trader, because you're not going to get a lot of slippage. With copper on the trend, I think I've got that starting at around 440, which is getting close to, obviously, midway through. It's definitely midway through the European session. So that would be probably, I wouldn't start any earlier than 4 o'clock. The ideal start time was around about 6 o'clock on copper, but you do get some good movement from 3 o'clock onwards. I think that with copper, and that's a good question, Kim, with copper you probably wouldn't be able to, I think 10 contracts would be 10, maybe 20 would be a stretch on copper. So, but again, if you've got a multi-system strategy, you'd be probably wanting to spread it over 2 or 3 systems. And remember that obviously you may have multiple. You might be trading copper and gold, and have a trend and failed trend and gold as well. So I guess the update there is that I want to get the Viper out. Hopefully, like Mike's said it. Hopefully, it'll go out tonight. And then my next strategy that I'll release will be I'll release the failed trend before I release the pivot, because I think that as far as complementary systems, you're going to get a lot more out of the failed trend with the Viper than the failed trend, the Viper with the pivot. I think if we release the pivot and the Viper together, they're kind of, well, they're not similar systems, but I think you're going to do much better if you've got the trend and the failed trend, because they're definitely going to work better together. So guys, that's really what I wanted to cover tonight. I didn't really have too much more to go through. I wanted to do a little bit more work on this combination copper trend, failed trend. So I'll post that up I'll set up a copper. I think I've already got a copper drop box, but I'll set one up if we haven't got one. I'm pretty sure we do. And I'll put that in. I'll put those 2 in the top 10 anyway for you to have a look at. As I mentioned before, I'll try to get this failed trend out to you early next week. The Viper should be out by tomorrow at the latest with the new update, so that'll be fantastic. And as I mentioned before, if you aren't looking at the currency markets, there's a number of strategies there on the Viper that look really good on currencies. You should definitely avail yourself of those. And that's about it for me. I'm going to be taking you through in the next week or so my case study on optimization. So I've done a fair bit of work on the optimization, and I'm going to take you through that as part of the protocol that we're going to have for our optimization and testing. So guys, that's going to wrap it up. The end time for copper should be around about 15:10. I think it finishes. So 3:10. Copper is end of day. Let's have a quick look here. Pretty sure it's around 3 o'clock. No, it's 4. No, it's 18. Okay, so maybe that was an early session close. Let's have a look. 1. Okay, so we get, there's not a lot of activity after lunchtime. So you're not getting a lot of activity after about 1 o'clock. So 1 o'clock is when things start to really kind of die down on that market. Alright guys, thank you for your time. As I said, keep an eye out. I've posted a couple of videos into the live training area. I did a higher time frame video. I'm going to post a few more up tonight, or tomorrow I should say, on a couple of the new indicators. So keep an eye out for those. And also I'll be doing a couple of system reviews. I'll be doing a system review on that failed trend as well, just to give you a look at the gold strategy that I've tested up, and it looks really good. That's using the MACD more as the entry point, but there's also obviously our standard close below on a failed trend. So I'll do some video updates on that as well. So thanks for your time, guys. Any questions before we wrap it up? There is also a bit of an update. I'm sourcing an alternative server for us to look at as well, a bit of a cheaper option for servers. So for those of you who are currently using a server, I may have something that could be a lot cheaper and better for us to have a look at. So I'll keep you updated on that as well. Alright guys, thank you for your time. Have a fantastic weekend, and we'll catch you, or if I catch you during the week, that's fantastic. But keep an eye out. As I said, there'll be a few little updates going out, new systems. We've got probably about 3 strategies that we're going to release before the end of the year. So you've got the the Viper, the failed trend, and the pivot trader. And I'm going to try to get out before the end of the year the adjustment or the update to the cycle trader as well. All right, guys, thank you for your time. Have a fantastic rest of the evening, and we'll catch you later.